22nd February 2023, Wednesday. Cal is back. Yes, my voice is back. Thank you so much for your understanding here. Guys, today's video is so important. There are many things I'm going to share with you. It could be long, but it's very important, so you must watch all the way to the end. And of course, brace yourself because S&P 500 may sell to 3,800 by mid of March 2023, which means that we're talking about from now till then, within the next 20 days or lesser, we can see another 200 points downside. All right, that's easily translate to about 1,600 to 1,800 points of the Dow Jones from where we are right now. This is crazy. Let's go. All right, do make sure you do your risk assessment, and thank you, Ames, for the kind sponsorship. Now, before we go into the sharing, now I know that people have been asking about when I'm going to have the next spin the wheel lunch with Cal thingy. I'm so sorry, I was so busy the last 2 weeks because I have so many causes to present and stuff like that. So now I'm informing you guys that I'm going to invite 5 people. As long as today you leave a comment based on what you hear into the comment box, we will use once you put it in, okay, within the next 3 days, I'll accept it regardless, and then we'll spin the wheel on this coming Saturday, and then the 5 people will join me for lunch next week, okay? It could be a very nice place. It's at this particular place I love to go. It's called Hey Bro. It's at Bogus, and the food is really good, okay? Alright, so guys, leave a comment for today's video, and I leave you 3 days chance to do that. Means today, tomorrow, Wednesday, today, tomorrow, and the next day. As long as you leave a comment in this particular video, I will give you a chance to join me for a lunch, okay? We're going to have 5 people coming in. Okay, let's go. Now, first of all, let's recap what happened last night. Okay, the Dow Jones lost 700 points. Oh my goodness, okay? I mean, I was telling a lot of people, I said that there will be a big movement of at least 500 points downside very soon. And of course, when last night, when the Dow went down by 500 points, many friends text me on the side and asked me, Cal, you are spot on, okay? Now, Tesla went down by 5% back below the $200 mark. And I've been telling people this, don't buy Tesla above the 200 mark, all right? So people who listen to me, congratulations, well done. Now, Apple lost 2.6%, Microsoft down by 2%, and of course, this I think is Amazon down by 2.7%. So overall, it was a huge sell-off. You can see there's 2% across the board, and VIX went up by 7%. Congratulations to those who believe in it, all right? So what happened? The 10-year yield treasury climbs 3.9%. I told you guys it will go to 4%, right? And the 2-year yield went to 4.7. This is something that you don't see since last November. Now, the reason is because the traders grapple with the hotter than expected inflation data. We tell you from the CPI to the PPI. And of course, now people are saying that, okay, seems that Federal Reserve has no way to control inflation at the moment right now. Hence, therefore, they'll increase interest rate, and that will definitely tip the economy into a recession. Guys, I've been saying this like a broken recorder for 2 weeks, and finally, Wall Street picks it up. All right. So the thing is this, every data point right now, they see that there's a chance and reason for an uptick in the yield, and that is adding pressure to the market. And of course, from now till then, until the next FOMC meeting, is still a distance away. And if the numbers keep on showing that the inflation data are not coming down, I'm going to tell you this, the market will keep on cracking. All right. Now tonight, we will have the minutes from the meeting, and it's pretty clear that, of course, Central Bank knows that they're going to hike 25 basis points, and most likely they will say in the minutes that they will continue hike because as long as inflation data is not showing any pulling back. I'm pretty sure of that. So we do expect that there'll be some more volatility tonight, all right? So you can see that the Dow was pushed up the day before, and then the next day, the selling was just torrid all the way. There's no holding back. There was a little bit of V-shaped recovery, but that was very muted, and the market just kept on selling. So let's watch what CNBC says, all right, with this interview about this guy's view on the market. Let's go.
Closer to a recession in the coming months than that October low? Not really the low. Let's bring in Canaccord Genuity's chief market strategist, Tony Dwyer. Tony, great to see you. So what kind of low are you bracing for?
So why don't we just give it the data? So you open the show with how the 2-year note yields at the highest of the cycle. We look back since it's been a 500 stock index and since 1957, and the S&P 500 has never made the low of a cycle when it's down more than 19% before the 2-year made its peak. So with the 2-year making the peak of the cycle so far, that tells you that October low wasn't the low.
Okay, so then in the notes you say that the higher the 2-year yield goes, the more likely we are headed into a recession. So is that, you see that in the cards at this point? And so a recession does what to the markets?
I do, Mel. I think the soft landing scenario was because you couldn't disprove the data yet. In other words, you don't go from super fast to a recession in a tick. So it takes time to get there. So what we're basing our recession call on is the percentage of the yield curves that are inverted is at almost 87%. All you need is 55% of them to be inverted to get into a recession. Even the soft landings of 1966, 1995, and 2016, the composite leading economic indicators were nowhere near as weak as they are now. Anytime the LEIs have been here, you've gone into recession. And then lastly, not just the money supply, but the bank lending standards have tightened to a level that, and the loan demand for C&I loans are at a level that have been associated with recession. So to me, the data is there for a recession. We just haven't had enough time to get there yet.
All right, so you can hear it for yourself. Yes, indeed, the LEI, the leading economics indicators are really, really bad. I mean, it's undeniable. There's no way we will not see a recession, guys. There's no way at all. It's pretty clear. So I'm so sorry, guys. Brace yourself. I believe that the S&P 500 will really go down to 3,800. Okay, so let's watch the technical of the chart here. Let's go. All right, first of all, let's look at the technical side of the market. Let me just change my color. Now, this is the Dow Jones at the all-time high. This is the all-time high area, okay? And then this is the latest low back in October, where the market pumped it up all the way. So the Fibonacci actually went up to 61.8. Now, by right, when it hit the 61.8 and it goes higher, usually the market will really go to the 0.78, okay? Or the 786, okay? All right. And that will actually be a strong resistance, and then after that it will be back to the all-time high. So that is usual case, but you can see very clearly the market has a very strong resilience as about 34,500 area, very strong resistance. And then after that itself, right, the market pulls back and went back down to the 50% mark, which is at this 32,820 area. Okay, this is very important number, because after that itself, right, you notice the market just holds there and then tries and recover back again. Okay, but this time now the market really can't go anywhere higher than 34,300 area. That means that at 34,300, that was the next resistance. So no more 34,500, it's 34,300 right now, and the market consolidated for a very long time, and yesterday it just collapsed. Okay, now many people were buying that it will break 34,500, but the market chose the other direction, and now very clear the market is going to go back down to 32,820 again. Okay, I'm pretty confident that we'll see this coming in. It's about 300 points from here right now. But what is scary is that, guys, if you look back now, the market, the moving average here, the MA 150. The last time we saw this happening, the market breaks down all the way, all right? Once it breaks here, the market breaks down all the way, all right, guys? So this is no joking matter, guys. If you were to ask me, once the market goes near to 32,500, which is very important, because that is the very near to the 50% mark itself, the market can really nosedive. And if things get really scary, that's why I tell you, there is a possibility to see the Dow Jones trading the 30,000 mark, guys. This is not a joking matter, and this is really possible. Traders, you need to be very careful, because if this actually happened, then of course people have been buying shares the last 2-3 weeks because they've been buying non-stop. They might face a very big margin call coming in. Okay, so traders, be very careful. So you look at the S&P 500 chart right now. I've been sharing you guys this. I said that yesterday that the market at 4,200 is critically a strong resistance, and that's why Michael Harnett gave a strong call on that. He said that anything above 4,200 sell. He's been saying that, and the market is coming down right now, and it's very near to the moving average, as I mentioned, the MA 150. And of course, the last time we saw this, the market pulls back down, but by at least 200 points. Can you see that? Yes, indeed. It's pretty magical. And don't forget, Mike Wilson says that anything below 3,900 is a good sell. So all these are telling you that things are not going nice. And of course, with the moving average and the RSI is going down this way, it does show that the selling pressure is going to kick in. And of course, again, I repeat, because so many people call for buy recently over here, things can get very nasty. All right, so this is one big warning here on the charts form. And of course, the 2-year yield is mounting up. You can see that ever since that it hit a support at 4.07%, I've been telling you guys this, the market will go up, and now it's going higher. And I stick to my guns. I believe that we will see 6% on the Fed fund rate. Okay, I believe that the Fed fund rate will see 6%. The market is reading at 5.25 right now, and it's inching to 5.5. I'm very confident we'll see 6% right down, probably by August this year. All right, I'm pretty confident we will see Fed fund hitting August period 6%. And of course, the US dollar, well, we did see a bit of recovery yesterday, but the thing is this, he hasn't really moved up yet, because there's still a lot of concern right now, because people are still fearing that if there's going to be a recession, how about the US dollar? Because if that's the case, the Federal Reserve will have to cut interest rates, and that will actually pull down this US dollar. So the US dollar now is not the best marker to actually check the market. All right, we can have the yield going up and the US dollar can be flat, because the market must have a reason to buy into this. But nonetheless itself, the crazy part is this right now. Oh, there's some PowerPoint issue. Let me just soft settle it. Okay, give me a moment. All right, you can see that now from Bloomberg, okay, the Fed, the ECB, the BOE, all of them are looking, right, if things really go resilient, how high can we go? And you can see now the number is showing at 6%. Yes, for the federal side. This is no kidding. And I say that, guys, we could see it by between August and September month, and now it is really presenting on its own. This is no joke, guys. This is really insane. And of course, not only the Fed and ECB, BOE, in fact, the Asia central banks may need to keep hiking if core inflation stays high. So we saw that the Japan key yield rises above the 0.5% BOJ ceiling again for the second day. This is not a joking matter. Things can get really out of hand. And of course, New Zealand just delivered half a point interest rate hike and still sees 5.5 as a peak, but I can tell you 6%, okay? And of course, there's more across the board. Guys, things is really getting very nasty. And Morgan Stanley, Mike Wilson says already back then itself, because we had a 6 trillion increment, there is like an oxygen to people, to the market, and you can see that that causes the global M2 to rise up. Now, when M2 goes up itself, right, it's never a good sign actually. That means that the market is relying on serious assistance right now. So according to Morgan Stanley, Mike Wilson, he says that, right, liquidity has provided the oxygen, providing the supplement. Oxygen investors need to survive in death zone. But once this oxygen supply run out, right, things can get very bad, and this could actually hurt people than being safe. And now he is very confident that we are in the death zone right now. So this is really nasty. And with the PE ratio at 18.6 and the ERP is 155, basically it's with the thinnest air of entire liquidity of the secular bull market back in 2009. So we are back actually worse than here itself. And he believes that this is going to really crack the market. And of course, if interest rate continue to go up because of inflation, then this was going to squeeze off everybody else. So remember this Bank of America CIO, which is the Chief Investment Strategist, all right? He actually came in as his name is Michael Harnett, and he calls for sell. Now remember this back in August last year, when the market was really going up and everybody was so bullish, Michael Harnett came in and says that, okay, the S&P 500 to sell anything above 43.28. And goodness sake, that was really the highest point of the market. Really, it was a really highest point, and after that he said that it will go down by at least 20%, and the market really dumps 20% down all the way. My goodness. Now of course you can say maybe he was lucky, maybe he was just fortunate, but again recently back here itself, I think that was last month I believe, Michael Harnett said anything above 4,200 is a sell. Now back then the market was trading at 3,900, 3,950. So he gave a few and said anything above 4,200, it is a sell. And gosh, look at it, guys. Look at it. The market sell exactly where he calls for. And the thing is this, he says that there will be selling, and truth be told, the market really comes off. And now the market is trading even lower. It came down to below 4,000 as of yesterday. So a guy like this is so incredible, accurate. What is his view right now? This is going to be a stunner. He actually shows all the different charts and telling you that right now, right, the US bank is still a good place to place your money in, and you can see that US treasuries versus a bank is still doing fine. And but he see cracks in the home builders, he see cracks in the US, EU and JP bank stock. Now this is really a very strong statement, and in fact he says this, guys, every time when you see a very sudden jump in interest rate hiking, usually you will see bad problem coming in. And truth be told, right now, with 450 basis point in 11 months, this is the most aggressive Fed tightening in decades, and definitely that will break something which we all understand. So you cannot run away from this, because things is going to get very ugly soon. And in fact, it's right, he actually show all the inflow and outflows, and you can see very clearly that there's a very large outflows from the emerging market debts. And although Europe still seeing some inflows, but the outflow from China is pretty clear, and the tech sector itself is definitely showing. So Michael Harnett is saying this very clearly. With the current situation right now, he believes that as long as S&P 500 can't cross 4,200 convincingly, that means it's 3,800 by March the 8th. Now, he's very specific. He actually say by 8th of March, okay? This will happen. And with a guy who have been so accurate, why not? Let's believe a bit and let's put a stop loss if you ask me. And of course, not only he is turning bearish right now, we all know that Mike Wilson is bearish. And recently from this JP Morgan, Marko Kolonovic, he turned from bull to bear. David Costin, Zavita, those people I've also been covering. And also like people like Scott Rubner, he has been bullish too. All of them are turning into selling mode. All right, guys. So think about this, guys. This is something that you don't get from people, because I give you very specific things. I dig up for you. I spend hours doing all this. I want you to really consider and make some money out of that. So of course, to me as a trader, I want to ask why Michael Harnett say 8th of March, and what is there about? So when I Google it, right, I don't see anything here, but seemingly everyone is covering this thing and is pretty confident that it will go. So I went to Investopedia, I went to this to check the calendar, and oh gosh, okay, 8th of March is happening to be the ADP night. Then the thing is this, I realized that yes, okay, wow, take a look at this. Apparently itself, right, the last ADP is 106, okay? And if the forecast now is 178, that's already a big jump here. And if that really happened, this will mean that there's no impact at all to the interest rate got no impact to the job labor. That means that US Federal Reserve has really got all the room to push interest rate higher, and that will really kill the market. So guys, now it makes sense to me, and of course I'm pretty confident the number will be high. Really, I am confident the number will be high, and that is why I believe the market is going to come off pretty soon. So the thing is this right now, right, I realized there's something extra that I dig it out for you. Apparently, right, since November last year itself, right, a lot of people has been shorting Exxon, all right. Yes, this is the #1 stock to short. You can see across the board, many short sellers put big bets on crude oil, on this oil market, and also ExxonMobil. And you can see very clear. Now, what is that? Because you think about this back then, right? Biden was pretty obvious. He wanted to bring down the crude oil prices, so he actually did and released lots of reserve from the oil from the reserve. And that makes sense, because if that happens, naturally crude oil price goes down. Hence, therefore, it makes sense that this energy company will suffer, right? Right. By logic of this, it makes sense. But in reality, oh gosh, something has changed, guys. Let me show it to you right now. Let me just get my mouse in. Okay, you can take a look here. This is the ExxonMobil price with the crude oil price. Now, you can see that when ExxonMobil price is going up, because crude oil was going up. When ExxonMobil price is going down, it's because crude oil came off. Crude oil is the one in line, okay? But very interesting, in August itself, right, when all the reports says that it's time to short the ExxonMobil, now we know that crude oil price came off all the way from the price of average about $85, okay, from $85, it dropped to about $64 to $65, okay, that is the US crude oil, and of course that is the non-adjusted because the one is now $70 here. But my point is this, guys, that the reason makes sense, right? But look at ExxonMobil price. ExxonMobil went all the way up. This is not right. Something is wrong. And think about this right now. What if the crude oil price start to recover and goes up? What will happen to ExxonMobil price? I tell you, this will get through the roof, and ExxonMobil may hit as much as $150, okay? This is not a joking matter. It is very possible for ExxonMobil to see 150. And I tell you this, guys, if that really happened, oh gosh, guys, you cannot imagine how crazy inflation will be. Now, of course, you may ask, why make me think that you will see this? Okay, let me share with you right now. Now, look at this. This is the U.S. Strategic Petroleum Reserve, okay? Now, back then itself, right, in this period of time, that was where Joe Biden came in and said, you know what, let's just bring out inflation a bit, let's help Federal Reserve, and it drove the oil price downwards, okay? But now, where we are right now, we are at all the very low end of reserve, and if you remember this, if you can't, let me tell you this right now. Do you know that the White House actually says that they'll start to begin buying back crude oil? Now, back then, it was the December 17 article. I remember this, and they say that by February, they'll start to buy the oil. Oh my God, okay? Now, let's say if they really do what they say, okay, if they really do what they say, the oil price will go up, right? And if they do that, then what will happen to it? Now you understand why it's out. Very interestingly now, suddenly Biden go to Ukraine. Suddenly it's out. You have China going to Russia. All these things seem like they have a timeline. They seem like they know exactly what can happen or what should happen. And I tell you this, if you tell me now, with all these potential geopolitical issue right now, which actually can bring crude oil price higher, and with the inflation issue right now, I can tell you this, the equity market has nowhere to go but down. So look at the crude oil price right now. This is crude oil price back then, and you can see very clearly right now, right? The crude oil price is showing that the lows are getting higher at each level, and of course now we have a very strong area, like a triangle, that is going to break. So if crude oil pump up because of any geopolitical reason, it can't be economy right now because you can see China not really buying into certain thing, and of course the global market is actually coming down right now. So it can't be economic. It has to be something different. It has to be a black swan. And if, let's say, anything happen, my goodness, and crude oil just shoot up all the way to $84 or even $96, guys, this is going to break the market. And I can tell you this, I'm getting closer and closer. This feeling tells me very clear that something is going to give in, all right? So that's the reason why you can see Goldman Sachs very positive, and they keep on saying that they will and expect crude oil to see $100. This is a reiteration from Goldman Sachs. They are very confident. They believe there will be a serious supply problem in 2024, and they believe that this is going to be a bullish connection for this commodity. So guys, this is really no joke. Things can go very ugly, and that could explain why the VIX itself has shot up. Now, I've been telling you guys this, any price at 18 to 19, just buy some VIX and hold. And I tell you guys this, you go to 24 to 22, we have fin already. The VIX target is 26, but my ultimate is still at 34. And of course, there are some players who actually bought VIX and expect by, I think it's either April to June, the VIX to see 50. Wow, if the VIX really go 50, that means that the Dow Jones had to go down quite severely, and there must be some really bad thing happening in the market. And for this guy himself, if I did the calculation correctly for him, he could make as much as $10 million. Wow, that's a very big bet, right? So guys, I don't think things happen for a reason, and of course, this is going to be really nasty. And of course, again, I don't only tell you technical or stuff, I tell you more things. Nick, as you know, right, this guy is from the Wall Street Journal. He's like a mouthpiece for this Federal Reserve, and you can see very clearly he says this. Now, a deep recession will be necessary to achieve a 2.1 inflation projection. All right, this is from Cleveland Fed side itself, and it's very clear that the model shows that if they really want to bring the PC data down to 2%, they must have a recession. But of course, if let's say they allow inflation to go to about 2.8%, then maybe this so-called problem may not surface. But then again, that is against what they say, right? So in short itself, you look at it from this angle, it's blatantly clear. The Federal Reserve actually using him, Nick, to tell people that, you know what, the inflation is still going to continue, but instead of looking at 2%, maybe at 2.8%, and like that. And of course, maybe it will be given, this job will be given to the next Fed chief to settle it instead, not the Jerome Powell. That is pretty smart, right? So all these things tells me, guys, we're going to head for big trouble. If you don't want to get yourself into serious trouble, maybe you just go slow in your investment. And of course, if you want to buy, you can buy it later. So you can see right now, last Friday, the VIX, the fear agreed was at 68. That was last Friday, and today we are at 63. The numbers went lower, but we're still at a greed zone, guys. So for normally, we all know that if the market really pulls back, this indicator will pull back all the way to here before the market bottom. So that means there's still a lot of room to go, because optimism is still very high and things can get very, very scary, guys. So all this information is so important. Really consider and use it on your trading. All right. I'll see you guys in the technical side. See you later.